Hello, everyone. Welcome to today's webinar. Is your organization prepared for high volume payouts? We're excited to have you join us. My name is Laura Beth Ezel, and I'll be moderating today's event. We are thrilled to be joined today by Omri Moore, the CEO and co-founder of Routable, for this one-on-one chat. Now, in this presentation, Omri will discuss how growing organizations should prepare for accounts payable growth. Now, we'll start with an overview of the challenges companies and finance teams face as they deal with rising payout rates, then detail at what size companies must begin to think about a mass payout strategy, and dive into tactics your business can utilize to manage past payout designs. But before we start, I just have a few housekeeping items. Please note the slides will advance automatically throughout the presentation. To enlarge the slides, click the Enlarge Slides button located in the top right corner of your presentation window. Now, if you need technical assistance, you can click on the Help widget that's located on the bottom left corner of your console. We encourage you to submit questions at any time throughout the presentation. That's as you think of them, using the Q&A widget at the bottom of your console. Now, we will try to answer these during the webcast, but if a fuller answer is needed or we just run out of time, please know that it will be answered later via email. So please know that we do capture all questions. After the presentation, you will also be able to access the on-demand recording of the webinar using the same link from today's live event. Well, with that out of the way, let's begin with an overview of what we will cover during today's conversation. First, we're going to delve into what a finance team experiences when payables become overwhelming. Next, we'll discuss why this becomes an issue and how it hinders organizations during a key part of their growth journey. After that, we'll talk specifically about the types of companies that should look towards a mass payout solution. What do they look like? And how many payouts do they process? Afterwards, we will dive into the details of what mass payout solution features bring to an organization and how it addresses the finance team's concerns. Finally, we'll touch on what these features bring to the organization, providing another layer to encourage stronger growth. Well, as we begin this discussion, I think it's best to give listeners a sense of what the experience is within accounts payable as an organization grows. While we hear a lot about how to manage sales or handling marketing under the weight of growing revenues, AP is something that often gets ignored or simply isn't addressed until it becomes a problem. So, Omri, why don't you, we start on this front here. What is the experience that organizations face as they begin to grow from a small to a mid-size rate of payouts to one that needs to handle mass payouts? And, what were the issues or concerns you see that they must address?
Thanks for having me, Laura Beth. Sure. So the first thing I'd like to say is most finance teams and just departments find out that they have an AP pain a little bit too late. They mostly are given a task of keeping the business running, doing their job. And often they don't get a heads up that we might have to double the amount of vendors or triple the amount of bills that we are receiving. They just find out about it as things go. Finance teams have to focus on forecasting, running their month-end close, doing their regular job. And what typically happens is the volume of bills or the volume of vendors will accrue month over month to a point where the size of the team typically cannot handle the amount of work. Now, what I mean is that there's too much data entry, there's too much back and forth questions, maybe automated approval rules have not been set up, and it just might be that the sheer amount of vendor management relationships have gone beyond what a team of 5 to 10 people can do. Now, a lot of the time, what happens is that teams will say, well, we just need to hire more people to handle more AP. But typically what we like to do is to say, okay, is your finance team between 5 to 10 people? Do you have over maybe 100, 200 vendors? And do you have over 500 bills? That's a really good starting point to look back and see what your last 3 to 6 months of just daily workflow is. And say, am I able to get my actual job done? And is AP interfering with my ability to do finance. At that point, it's a good conversation to say, okay, what does my process look like for vendor onboarding? And what does my process look like for ingesting a bill, getting into my ERP, and then working with my team to get it paid? And that's a perfect starting point to understand what are the points in the funnel of a payable that get a little bit annoying and a little bit overwhelming. And then all you have to do is multiply those pain points by the amount of bills that you're receiving.
Great points there. And how much of what you describe, Henri, is the result of organizations leaning on a manual processes, particularly during the early stages of growth development? And then how much does that impact the organization once it's reaching that 250 to 500 payout rate you mentioned?
Sure. As you mentioned a couple minutes ago, finance teams aren't getting the tools or planning ahead like sales and marketing, right? With sales and marketing, you have, I'd say, quarterly objectives to grow the amount of pipeline that you're bringing in. So they are always anticipating the next quarter growth. Finance teams typically look in arrears, so they look backwards. So what typically happens is that I don't believe that the manual process is their choice. It is just what they're used to. Right. And what we really need to focus on is saying, okay, rather than just saying, is your manual process poor or is it inefficient? We can just start out with the conversation of, is it a pain? At around 250 to 500 payables per month, that's when a small team under 10 just doesn't have the time to keep managing this. The reason being is if you break down a bill, you can either go from purchase order to bill to payment to reconciliation, or you can remove the purchase order part of it and just go bill to reconciliation. It's about 15 steps per bill. And if you just start multiplying the amount of seconds that you take, right, and the amount of time that can go back and forth, and then you think about, well, okay, sometimes I have to edit them. Sometimes my vendor is a little bit problematic. And sometimes I might just not have all the vendor information to pay them. That at 500 payouts per month becomes a little bit overwhelming. If you cross 1,000 and you haven't figured out how to automate it, then what we see is what I would call the gluing and stitching of potential fixes that actually don't address the problem. We see a lot of CSV file exports. We see a lot of emails with, can you approve all of these bills, without context. We see a lot of just, I need to get my job done. I won't be able to do month end close unless you help me out, but my process isn't fixed. So the manual work, I think, is just a repeated habit that doesn't look forward. And what we want to be able to do is help a business just raise their hand, anyone on the finance team saying, hi, I am overwhelmed. This process won't scale. I need to look forward and estimate what the next 6 to 12 months is. Because if you just grew from 400 bills to 500 bills, guess what? 750 is coming up, 1,000 is coming up. And sometimes another department might close a vendor relationship that you don't know about. And that vendor just might take up most of your time, or it just might just require a lot of bill data entry. So that's really, really critical.
Great points there. And describe how, this complexity can complicate processes and that vendor relationship you just mentioned.
Yeah. So from a process perspective, this is really interesting. When we talk to a lot of company, we understand that they know their processes, but they don't have it documented. And I find that fascinating. Imagine if you're a finance team with 2 people and you need to 10x the amount of bills you process. You would probably love to have it documented. Here's our AP policy. Here's when we review bills. Here's how we run approvals. Here's how we do reconciliation. A lot of that documentation and training that you would maybe have from sales enablement, right? We don't see that happening within finance teams because, again, finance teams are pressured to just get the current work done within about a 30-day cycle. So there's not a lot of FinOps or finance operations that is going along with the finance team to do it. once you start identifying the flow to enter data, to make sure that it's recorded the right way, and to actually pay stuff with approval on time, I think then you can start to think about refining the process. And typically when we talk to companies, if we learn that they haven't thought through the current process, we don't sell them anything. We say, let's pause and have a conversation about what does your flow look like today for a bill payment? And then what would you like to automate it? What are the points of friction? And let's get really into this part of it, because if we don't understand what is not working for you, we can't automate and scale it. Now, from the vendor management side, this is my favorite part because it's typically ignored. And when I say ignored, I truly, truly mean it. We see a lot of companies not thinking about how to onboard a new vendor. What are our policies? Do we require W-9 before payment? Can we collect a W-9 after payment? How do we collect their payment information? What type of vendors do we have? Are they contractors? Are they businesses? And then the best question of all is, who has leverage in the payer relationship? Sometimes, Laura Beth, you might interact with a vendor that is a Fortune 1000 company, and they just might have more power and leverage over you to say, well, Laura Beth, we're giving you this random document with our payment information. It might be stale, so you might send us a payment and it might be rejected by the bank, and your payment is also due tomorrow. And you're kind of left helpless. So without thinking about the cycle of what is my procedure to onboard a vendor, what is my procedure to validate that this vendor is the right person, contact, business, etc., and then what is my procedure to manage them? I think we know this, but finance departments have people that come and leave, so you might need a new contact, right? How do you store your contacts per vendor? They also have varying bank accounts. We see businesses typically switching bank accounts every other year, just due to growth or better relationships, right? So having the ability to have a paper trail saying, we paid this vendor at bank account 1234, and now we're paying them at 7785. That is a really important thing to do also from an audit perspective. But what we're talking about is complexity builds when you don't have your processes identified and you don't have a thesis on what's working and what's not. And that alone can really hinder your relationship with vendors, because if you pay late, they become frustrated. If you send money to the wrong bank account, they become even more frustrated. If it's unclear to you or to them what has been paid or not, then it hits on your professionalism. And the way I look at vendor relationships is they're the lifeblood of your business, right? Finance is simply there to make sure that the money flows between two parties back and forth and is recorded the right way. But finance doesn't know the work that another department did to build that vendor relationship. And I think it's really, really important that the vendor relationship goes smoothly, because you want to retain the vendor, right? There's a lot of industries, like, for example, we'll say the gig economy, where the effectiveness of vendor management is going to be crucial for the retention of vendors, right? If you're quick to pay, if you're transparent, if there's no lag in onboarding or receiving funds, those things are really, really critical. When you're slow, when you're not transparent, and where you don't have processes internally, it's going to affect the vendor relationship. And if you're going to mess that up, it's going to lead to more pain next month than you're currently experiencing.
Right. I kind of put a star by those people that pay quickly and on time. It does. It kind of builds a good rapport over time, and you you favor them a little bit more because it's easier to work with them. So great point.
And also, when you just know what it's for, right? I think at the end of the day too, sometimes you get paid and you see something in your bank statement and you say, I appreciate that I got paid, but what is this for, right? One of my favorite things is sometimes companies have DBAs, right? Let's say I can have a DBA of Cool Payments Company, but our legal name is Routable Inc., right? Routable Inc. will show up on the statement of the bank statement. And my vendor might know me as Cool Payments Company. And when you don't even give them transparency on how the money is going to show up on the bank account, that's another layer of confusion and another email that you have to deal with, right? Yep. And no finance person wants to get emails about what is this, right? It's literally
Right.
the email says, what is this? And that's it.
Yeah, I've personally done that. Send a message and be like, I think you paid me, but I can't tell that it's from you. So great points there. And so you had mentioned earlier about how marketing teams and sales teams, they look ahead, but finance kind of looks back. And so my next question here is, why are finance teams slow to address this concern here?
I believe it's simply because they're firefighters. Um, we are not yet at an age where we appreciate and celebrate finance departments like we should. They come in, they do their job, they make sure that we are compliant, they make sure that we adhere to policies, and they make sure to, I'd say, deal with other departments forgetting to do the steps that they're being asked to, right? So a lot of finance's day is just making sure that they're able to process the same amount of work every 30 days. And that there lies a problem. They're anticipating the same amount of work every 30 days rather than budgeting for a percentage growth in emails, complications, failed payments, etc. So I think it's really critical that, I mean, I love treat yourself, right? But I think it's really critical that finance departments and leaders take a step back and say, well, what if we had the best tools? What if we thought ourselves as a performance leading department? What if we wanted to attract talent based on how we do finance better and more efficiently? Those are really, really critical things that I think that finance teams should start to almost demand as a part of their relationship within the org, because a efficient and relaxed finance team is a fantastic one. A frazzled and unorganized and inefficient one is one that nobody wants to work for.
Absolutely. And so, if this is an issue that finance faces, how do you talk to a leader about dealing with it now, especially since it had never been a concern in the past?
Yep. So we have a series of 3 questions here that I really like, but as we talked about earlier, you just break down the process. I know this is actually somewhat annoying, but you take out a piece of paper and you, just by writing down the process, you'll discover steps that you forgot about. That's my favorite thing. So, and I would split it into 2 processes. I'd split it into the vendor process, vendor onboarding, and then I would split it into the basically the procure to pay to reconcile process. Now, those are vague. Those are large overviews, right? So when you do that, you'll actually break it down and say, hey, how do I collect W-9s or W-8 bends, right? You'll say, how do I collect invoices? How do I validate invoices? How do I know when to pay the vendor? A lot of these questions come up just by making a simple flowchart for each process. Who's involved? How many layers of approvals are needed? Those are the questions that I think every finance department should start with. Now, the one nice thing that we see about teams is they might not have everything organized and consistent and automated, but they do have chunks of it that are taken care of. So just by also looking at your process and breaking it down, you'll be able to tell yourself, what are we good at and what are we inefficient at, right? I think that's good too, because maybe a team is fantastic at collecting W-9s and never having a failed payment. That's fantastic. That should be a point of celebration. But it's still good to understand what are all the steps that are needed. And once you have that too, Laura Beth, it's easier to hire, because then you can pinpoint what part do you need. Do you need another AP clerk, or do you need to make a hire in finance operations for someone who's just thinking about the process of finance happening, not just finance and accounting happening daily in the data entry of it.
Yeah, that's huge, to knowing how you need to fill that space and time of somebody in which task. That's huge. So let's talk about that. As organizations grow, then they must consider a mass payout solution. But certain organizations face a higher likelihood of dealing with this issue. So,
yeah, and I like to say that mass payouts is simply a lot of AP, right? The process of mass payouts does not change from traditional accounts payable. It is just the rate of growth. of payments and vendors, which is overwhelming. So industries like marketplaces, insurance, digital health, a lot of telemedicine these days, you got to pay doctors, right? Real estate, you have to pay agents, etc. These are industries where we can see legitimately 100% year-over-year growth in AP volume. Doubling every year is a lot. In the span of 3 years, that compounds a lot. And typically what we see is that these departments will come to us when their hair is on fire. They've already identified it's a pain, but it is such major pain that the question is, how do we fix this yesterday, right? And then the hardest part is having someone who's overwhelmed in an industry like these by their finance process, and then having conversation where slowing down and breaking down the process is the most critical part to identifying how you can automate, right? Because if you don't know what stuff to automate, then there's no point in having the conversations. But these industries specifically, we just see the highest growth. We have one client that we work with actually that grew 375x in 2 years. And their finance team also grew by, I believe it was like from like maybe 5 to 25. So those things matter. And having that conversation and really just annual planning, budgeting, team building, so forth is really, really critical, especially for these industries.
Wow, that's incredible. That's a huge growth there. So, now that you need to implement a mass payout solution, then what? What steps might one take to determine the right solution?
Yeah, I would first of all talk about what is your biggest pain points, right? Maybe creating bills is not a problem. Maybe you have that automated or it's just efficient. Maybe releasing the funds is the issue, and communicating the release of funds to your vendors and reducing the amount of questions. That could be a big thing. Maybe it's the automation between creating a bill and making sure that the ERP is pristine and the right accounts are being selected and so forth. It might be vendor onboarding. But I think that once you start knowing these questions, then doing the research is the biggest part. And the biggest way I like to start my research, or Beth, is talking to your peers. I find that a lot of great finance decisions are made by consulting peers at other companies. And, following up to that, you got to Google search, you got to go into webinars, having, some diligence. But I really, really think that it's important to ask a peer in a similar industry how they're handling their scale. And if they have any insights, then start a conversation about what's working well and what isn't. Because a lot of the time, we'll see this actually in finance teams, that they're having conversations about tools and so forth, but they might not be having the conversations about scale. I find a lot of VPs of sales and CMOs to say, talk to another peer and say, how are you guys handling growth? How are you guys projecting the next 24 months? Finance departments consult with each other from different teams about what's working, what's not working. But the scale conversation isn't really a part of it. So I think it really matters to start that conversation, spark it with another team, look for a business that has had to grow. And one of the easiest ways to look at that is just looking at the amount of employees they have, year over year. That's usually a good indicator for growth. And then having a deeper conversation with them on what worked and what didn't. And from then on, you can start doing your research. But one of the biggest things that I'd recommend is, while it sounds counterintuitive, I would look for solving one problem at a time. Not all solutions can solve all problems. So I would identify your top pain points, and then I would just run a process to solve those. If you can find a tool that can weave it all together, then you're in luck. But as you know, most tools are good at one thing and bad at other things. So it's really important to identify what is a critical must now solve and what is a nice to have. We ask that question all the time. Need to have, nice to have. All those things are really important. And once you implement the solution to fix your need to have pains, then you can move forward. But we've seen once the finance team takes that step forward of just identifying that they want to do better and what they want to have more automation, their life changes. They're constantly now looking for tools. They're constantly having conversations about reducing less time. And it's typically too, because those industries that we just covered will keep growing faster than anyone can expect. So they always now have to gone from a department that just deals with the volume of vendors and deals with the volumes of payouts to a department that is proactively talking about how to plan for the future volume of payouts and the future volume of vendors.
Excellent. And when do you begin these conversations with companies? You stated how you had one who's come to you and their hair's already on fire. So, when do you start these conversations?
We start these conversations. We try to talk to them as soon as they, I would say, have, maybe crossing $1 million in revenue, maybe having between 50 to 100 employees. So it's a little bit early, but it's good to understand, especially if you fall into these industries. I think one of the most interesting things, Laura, is that an industry can dictate the amount of AP that you do. And that is like step one to identifying what your projections will look like. And then these questions, right? Next year, this year, and so forth. I actually like breaking down into 6-month increments. A lot can't be done in a quarter, but having a good understanding of your next 6, 12, 18, and 24 months will help you really plan just for the amount of tools that you need and the amount of people that you need internally. And it might identify a department that you don't have. For example, for marketplaces or for logistics companies, we often see at some point, not just finance being involved, but operations or finance operations. And that is a wonderful thing, right? We have seen almost consistently that finance will dictate, for example, what are the steps that are required to onboard a vendor. But when there's too many vendors, that is handed off as a process to an operations team. And they also almost become the vendor management team, right? They're thinking about how can we efficiently scale up vendors and make sure that we have all their information, accurate information in real time.
And Ari, do you have a couple of examples of like people are working with now and maybe different scenarios you could share?
Yeah, we had a company come to us about a year ago. They were doing 800 bill payments a month by hand. They were just typing each one manually. And they were looking for, I would say, a couple of things. One, they had to switch from QuickBooks to NetSuite. So just making that migration was on their checklist. I think that's actually one of the interesting things. Finance is always able to plan for the next ERP tool. So while you're making that process and you're saying to yourself, okay, what are we switching? Let's also have the conversation of what will the volume of vendors and payouts look like? And they came to us, and it was hair on fire. Going from 800 to anything beyond that with manual data entry was not going to be a solution. And what was really interesting is that they were looking for a way to automate. They didn't know how, but they were kind of stuck choosing between involving their engineering team to help build an internal process to, right? Like if it's so painful and you're expecting growth, can you have engineers build internal tools? Or they were looking for a CSV upload process. So instead of creating them one at a time, typing in all the data, could you create a batch CSV file that can programmatically create your bills and schedule payments to be released after approvals? And for them, what was really interesting, it was an either or decision because they couldn't find a solution that did both. They were projecting to go from about 800 bills per month to about 3,500 within a 12-month span. And I think once we asked them that kind of led to all the thinking. And I said, okay, that's a pretty big jump. Do you have the right personnel? And so forth. And we were able to talk about what is good now, what is better in 6 months, and what is the dream state of automation. And good now was doing the same with a little bit more efficiency, maybe being able to approve more than one bill payment at a time. We have the functionality, you can approve over 1,000 bills with one click. That was going to save them time. Then the good in the next 6 months was converting the manual process to a CSV process. And for what it's worth, nothing happens overnight, right? Building comfort in a new process takes time, but we were able to get them there. So they probably saved themselves 20 plus hours a week going from data entry to no data entry. And as they kept growing, they started crossing 1,000, 1,500, 2,000 bill payments a month. Then they finally got internal budget to have the engineering team help them automate this. And they used our API to create all of their bill payments, which I thought was awesome, right? But this took a year. And I think that that's kind of something important to identify is even if you want to make a switch to your process, you have to figure out, how big of a bite you can take up front and what is immediate right now and needs to be solved, what is going to be solved in 3 months, 6 months, 12 months. But ideally, you pick a solution and software that can help you address those needs, because what you don't want to do is pick a solution that helps you today and then in 6 months can't help, right? So we were really diligent during our whole conversation with them to understand their process, but we wanted to understand the dream state. Like, if everything was resolved, what would it look like? And then we worked backwards, right? What do we do in the meantime? How can we help automate? But just being an empathetic listener to finance teams, step one, we find out that a lot of folks just want to sell them tools, and we just want to say what's not working. And then we go from there.
Excellent points. And when you talk to companies, it seems like it's, very much about how to solve problems, as we were just discussing, but it seems like it's also a way to build, connections with vendors or partners as well.
100%. I think that at the end of the day, one of the things that we've seen, our favorite clients to work with are clients that care too much about their vendor relationships. And we see that attributed to growth in the companies. Clients that care about the statements that they send with each payment. They don't have to, but they make one, and it's branded and it's super clear of what's being paid. Clients that write thoughtful messages. Hey, Laura Beth, I'm paying you for this invoice, which covers, X, Y, and Z. Also included here is a vendor credit. I think that finance and vendor relationships is a process of transparency, right? If you think of an auditor, right? So let's say you get audited in 12 months. What are they going to do? They're going to look for a clear paper trail with awesome communication internally and externally. If you can provide that to your team, you're going to differentiate how you do AP. I think you're going to attract better talent to join your finance teams and your finance operations teams, and you're going to have better retention with your vendors, which might make it easy to not change things up. Destroying a vendor relationships is usually one of the things when it's done, it's a terrible process because everyone in the company scrambles to find the next vendor that is equally as good. And I think that it's really important to stay ahead of it and to think about a vendor relationship just like a customer, right? In sales, we have CRM, and there's pre-sales and post-sales, right? Everything you do before the contract is signed and everything that you do after the contract is signed. We think about churn. We think about just satisfying the needs of the customers constantly. We think about the same things. If you do the right job, there should be no vendor churn, and that relationship should improve, and the amount of conversations between you should decrease. And that's actually a good thing. A vendor asking you less questions is a fantastic thing because it means that you're doing the right job and you are proactive and you're transparent. And yeah, every time we see one of our clients go above and beyond for the people that they pay, we love it because it just means that, one, we can learn from them, and two, we can start thinking about ways to automate that and make it available for all of our clients, right? Because not everyone has the time to put that extra touch in their AP process. Some people might be just overwhelmed, and anything that we can do to make that process easier, we really love doing.
So how about some best practices, when having these conversations about payable growth and considering a mass payout solution?
Yeah, I'd say first and foremost, one of my favorite things to ask is what will the payment looks like on the vendor's bank account before you even start. I think it's really, really critical to make sure, kind of like how we started the conversation of, You don't want a vendor picking up the phone and saying, what is this for? So if you have, my first recommendation to say am I picking a tool, and is this tool one that can create clearer vendor relationships? Second step is, okay, what does it look like to onboard a vendor? Does this vendor have to sign up for a tool that they don't want? Introducing friction in any part of the vendor relationship is not good. And you have to remember that the vendor has their own finance team, their own processes, and their own ways. So you don't want to make them sign up for anything, right? The question is, how can you introduce as little friction as possible with increasing the amount of transparency you have? So those are two things that I think about right away, because you want your vendors to email you and say, wow, Laura Beth, I love working with you. How come you guys do this so much better than all of my other customers, right? That's step one. Step two, I think that you have to think about your ERP integration and how it couples with approval rules. If you think about it, approval rules are a method to say, is the data that I'm entering and is the money that I'm about to release correlating with the data that I want to have stored in my ERP? The way I look at an ERP, it is a wonderful record-keeping solution, right? It helps us create a paper trail of what's working and what's not. And if we cannot sync that data back and forth, that is a problem. But if there's no sync of data going between your AP platform and your ERP, you can't create custom approval rules. I think that's something that's really, really important. So one influences the other. And I think that approval workflows and automation around that is really critical. Like, for example, we get asked a lot, hey, can you turn on emails approval, right? I just want to write back approved. Sometimes people want to click in, read more, see what happens. Sometimes people are just busy and they might have just had a conversation about that bill. So finding ways to automate that is really critical. Then I would say API flexibility is really important, because as I mentioned, most companies might not think that they'll need to involve their engineering teams. But if you're going to cross, let's say, 5,000 bill payments a month, we're going to need to get into some deeper automation. And just knowing that the solution that you're picking will have the ability to help you grow beyond 5,000 payables a month, I think is really, really critical. It is just one of those things that if you picked another solution that helps you do things manually, but a little bit faster, and then once the daunting growth comes through and you don't have a response for it, it might be really difficult. And then here, 2 points that I'll end with is payment method flexibility and control of funds. I think it's really, really, really important to decide when you're releasing money, how fast you're releasing money, who pays the fees, you or the vendor, and then just having a lot of flexibility there. For example, today we have, I believe, about 13 payment methods that we support. And what we have found is that no two teams move money the same way, but they use the same payment methods, right? Like some might say, we always pay at 8 a.m. Some might say we pay on Fridays at 5 p.m. You don't want to tell a finance team what to do. You have to adhere to their policies, but you want to give them more flexibility on how to move their money, when to move their money, and to make sure that the money movement also aligns with the vendor relationships. Let's go back to the marketplace opportunity that we talked about earlier. You might need to pay food delivery drivers instantly, literally. Right now, money is in the bank account, and you might need to pay a restaurant in 3 to 4 business days because the restaurant is fine with that lag, right? I just talked about a contractor versus a business. So having that flexibility based on your business model and based on your vendor profiles is really, really critical.
Great points. And, this has been a great and really informative discussion. But before we get to questions, I want to get any final thoughts on how firms can manage this process.
You got it. So as we discussed, step one, if you're starting to feel the pain with the amount of vendors, maybe over 100 vendors or 250 to 500 payouts per month, I'd say start looking at your process. Break it down, figure out there's 2 processes. What does vendor onboarding and management look like? And what does the bill pay to reconciliation process look like? Then once you've done that, raise your hand. Say, we're looking to automate. We're looking for help. This won't work. I think that just making that statement to your peers is a wonderful first step of getting internal buy-in that a process has to be improved. That alone is going to allow you to start saying, okay, where do I need more budget from a personnel perspective, or where do I need more expertise? Then you're going to see what manual processes you have. You're going to be able to identify what unmanageable tasks you want to forget about because they're now happening automatically. And finally, you're going to be able to identify also, like we just said, what are the must-haves and what are the nice-to-haves, right? We really need to identify what are the processes that we want to get rid of today and actually get rid of forever, right? Laura Beth, like maybe if you never had to tell a vendor why they got paid, you might love life forever. And I think it's really important to just highlight with your team and have a transparent conversation about what are the processes that if you could just remove that part, the future days would look better.
Yeah, that's a great point. I love that, Omri. So this is, like I said, really enlightening presentation on a topic that needs to be addressed by growing firms, for sure. So we've got a few minutes left. So I want to field some questions that have come in against you here, even though you've done so well taking on so many questions that I've already thrown at you. But let's jump into this here, our Q&A. How do mass payout solutions work with something that's not digital, like check payments?
You got it. I just addressed earlier that we have 13 payment methods. We actually have 8 different speeds to send checks through our platform. One of my favorite things is, so we cover all USPS and UPS speeds, FedEx as well. But one of my favorite things is that while you will want to automate, you cannot change what the vendor wants, right? So if the vendor tells you, well, I want a check and I need it in 2 days, you need to find a way to get the check there. And also, I've met teams that have handwritten over 5,000 checks per month. I actually once stepped into an office and helped the finance team lick envelopes because they were cutting the checks that fast, and I just needed to be there to lick the envelopes to make sure that we can close them and stamp them on time. It's a terrible process, and it got a lot of paper cuts, and I don't recommend it for anyone. But it is crucial during your, what I would say, qualification process of a tool to make sure that you're not just improving the process for your team and sacrificing the process for your vendors, right? So it's really, really important to think about how do vendors want to get paid? How do we want to send money? And so forth. On that note, you might want to convert some of your vendors from check to ACH, but they might not want to, right? So I think it's really, really important to have that conversation internally too, because if you make changes without letting your vendors know, that might backfire and create more turmoil. So it's always good to think about everything that you're doing now should be supported. And then if you want to make the migration for a more digital solution, have that conversation with your vendors. But step one, just do more of the same, just faster and better.
Excellent. Thank you for taking that question on. Okay, another question here. Do you often see specific areas in the AP process that benefit more from the automation or some less so? Which ones?
Yeah, I would say first and foremost, just the data entry piece. If you can automate logging and two-way sync into the ERP, it solves so much problems. I meet a lot of finance teams that will create a bill by hand and will create a payment by hand. And if you can just make those things talk to each other and have a perfect record in the ERP, you're saving yourselves 10 minutes per process at least. The next thing is automation of approval rules. I do think that just the concept of getting your team member to help unblock a payment is really, really critical. So anything that you can do there to expedite the notification, nudges, recording, all of that stuff is really critical. I actually don't have a process that is worse by automation. I think just as I mentioned is if you're going to automate, you have to figure out what are the changes that we're making and who are they influencing, right? That's it, right? So if previously you were sending a check and now you're sending an ACH, maybe you write them an email that goes along with it to let them know that you're making that change in that process. I just think it's just a slow, transparent rollout of what changes you're making, and then slowly increasing the speed of automation over time. So both you and your vendors are comfortable with it.
Great, great. Okay, another question here, and that's how do you have this conversation with management concerning the need for this mass payout solution? It's always encouraging the management to see the need, right?
Yeah, for sure. Well, I like it because at the end of the day, management will care about growth. They will care about efficiency. They will care about headcount and so forth. But they're also going to make sure that management is going to care about not losing business. And as we mentioned earlier, poor vendor relationships, inconsistencies, slowed payments can lead to losing vendors. And specifically in the industries that we covered a few moments ago, the vendors are the lifeblood of the business, so you cannot lose them. So when speaking to management, it's talking about preventing vendor churn. It's talking about reducing costs over time because it actually is a lot cheaper to automate than to hire a brute force of people to do data entry. And you're just coming into them with multiple angles where you're thinking about how does this affect your business model? How does this affect 12 to 24 months growth? And you're also just helping them understand that your finance team is at a point where it needs to mature. And that is the right thing. And if any delay comes to it, it will have a negative effect on other departments, right? Fun example, if the finance team can't do month-end close consistently for 6 months, well, tax is going to be really slow. Or if an audit happens, it's going to take 2 to 3 times as long. And that's going to cost more. And that's going to create more problems for other departments. So anything that you can do to help your finance team move forward is a really great part. And I feel like we have actually a lot of great takeaways. Take this link, share it with them, and let's have a conversation, right?
Absolutely. Thank you so much, Omri. That's all the time we have today. A big thanks to Omri Moore of Roundable for his time and expertise, and of course to our audience for joining us. As a reminder, the webinar will be available on demand and a link will be sent to you soon. Have a great day, everyone.
Thank you.